to move on then. Westlife in the spotlight on the back of earnings. We've got Amit Jatia, who is the Vice Chairman, Westlife Food World, joining in to discuss the outlook on the same-store sales growth, what their capex plans are, as well as earnings trajectory. Good to have you on board. Let's start off by talking about the fact that middle-income discretionary consumption in India has been under stress for the last 2 to 3 quarters. What is the current on-ground situation? Are consumers still opting for more value-add items?
Sure. I mean, that way our numbers speak for themselves if you look at it. Even if you look at just last quarter alone, our top line grew by 22%, and this is over a pretty decent base last year. And same store sales grew at about 14%. So I think clearly that, the whole sentiment is reflected in our results in a way. If you look at it from the whole year's point of view, our sales grew by 44%, and particularly same-store sales that we are really proud of grew by 36%. So to that extent, at least from brand McDonald's point of view, the consumer has responded extremely well. Typically, also what happens if I were to zoom out and think about the category in totality, the QSR is about value. And therefore, when there's a downturn, actually globally, it is a known phenomena that QSRs tend to be more resilient in a downturn than any other sector within eating out. So we are pleased that we are part of QSR, and even within QSR, we consider ourselves as a leading brand. And putting that together, we've done quite well.
So what is the outlook on your same-store sales growth? Do you think that you will maintain the trajectory for FY24 as well?
Well, what we are looking at is, more sustainable number, because you keep growing the base and it is compounding. As long as we are between the 7 to 9% same-store sales growth, we feel that that's a good number to sort of shoot for. So that's the number we are kind of gunning for.
Right. Also, Amit, hi, firstly, just wanted to understand what is the market share in South versus West right now, given that you have new launches in the chicken portfolio in the South, for instance. Are you gaining share there?
Absolutely, that has, because obviously fried chicken is more relevant offering in South. And along with burgers, now that we've been with fried chicken for over 2 to 3 years, clearly in the consumer's mind, it has started resonating that McDonald's also has a great product that they can consume. And therefore, in South, I must say that we started our South journey 10 years after we started the West journey. So clearly, we did not have enough restaurants in the past. Now, with about 150 restaurants and a menu platform that is very relevant, we have been gaining share quite nicely. And therefore, we are going to continue to invest at a very accelerated pace in South India. You will see that with our new store openings as well.
Right. But you're also adding about 35 stores this year. You've already done that, and half of it was in the last quarter. Will this pace of store expansion continue? And would you target more than 40 to 45 stores in this fiscal?
I feel that's the way it looks like today. But essentially, our vision and our ambition is to get to about 580 to 620 stores over the next 4 to 5 years. So 2027, that's our vision statement. And therefore, at least for the following year, our plan is, that is in FY24, we are looking at 40 to 45 stores. And I always like to build that and then talk about where we are going. But aspirationally, in 2027, if we are in the range of 580 to 620, 630, I think, we feel we would have done our job.
Okay, margins have remained a little bit flat on a year-on-year basis. There's been a decline sequentially. Given that inflation seems to have peaked out, what is the outlook on your margins?
So, the first good news from a Westlife point of view is that year on year, we've been growing margin. And I like that because it's consistent. You see, versus just growing 1 year and then another year is down and up. So the good news is that it has consistently been growing, and we expect that trajectory to continue. We push ourselves very hard to grow our operating margins. And the plan is that as per Vision 2027, the idea is to stay within the 18 to 21%, and you will sequentially and year on year see delta. So in FY24 as well, you will see us move up a bit. We don't give yearly guidance, but I've given you the trajectory as to where we want to be. So from the we made a pretty big delta last year from 13.5 to about 17%. And therefore, the idea is to push this above 17% in 2024, FY 2024, and then push it towards that 18 to 21% in the next 2 to 3 years.
And now non-metro towns, they continue to grow at about 1.3 times of metros. Does that mean that the sales of value products is much more than gourmet burgers, which are traditionally high margin?
No, see, the most important thing about smaller towns is that we are an aspirational brand because they've never experienced the brand in their city. The good news is people travel both in India and abroad. And when they travel, McDonald's is quite dominant and therefore they visit that. But when it comes to them in its full glory, what I mean by full glory is an experience of the future restaurant, McCafe, sometimes a drive through. What happens is that aspiration has helped us start off the restaurant at a pretty good way to start with. What I mean by that is sales start very strong and then they continue to grow over time. So we are definitely accelerating our ability to penetrate smaller towns. It's not that we've not penetrated smaller towns in the past. So we've been in Nasik for 15 years, for example, but we followed a inside out strategy, where we put our seed in one place and then grow around it. So finally now, given that we have covered all the major metros, we are now growing quite aggressively around each metro, and that is where small towns are beginning to play a very big role. And fortunately, the brand is aspirational and quite respected in these towns, and the performance is quite good.
Right, you just talked about McCafe and you aim to increase its reach to about 100%. Currently, what is the reach and by when do you plan to achieve this 100% target?
Sure. I think we should be at about the 80% mark. If I'm not mistaken, we have almost 320 restaurants with a McCafe out of the 357 that we have, somewhere in that region. Within the next 2 years, we want to be 100% penetrated. So it's quite an aggressive plan because with the 40-45 openings plus the balance 30-40 restaurants that don't have McCafe, we want to cover this distance in the next 24 months.
Right. So with this 100% reach in McCafe, what would be the contribution of McCafe, say, in the next couple of years to the total pie?
So we don't share breakup of the contribution of McCafe to our total sales. But I do believe that we have just started the journey. We've just scratched the tip of an iceberg in that sense. I feel that there is a long way to go because it's a journey of beverages. It's not just about coffee. So we haven't even really talked about our smoothies, our ice blended range, our shakes, all of which is a part of McCafe. So I expect our average store sales of McCafe to double over the next 5 years and the penetration to reach 100%. So I believe it's a strong 4-digit crore brand.
That sounds very promising, and we just want to understand now, it's interesting that ONDC has been making the headlines as well when it comes to food delivery. How's the economics of food delivery on ONDC versus the traditional aggregators? Is it more beneficial to restaurants? Is it early days yet?
I think it's too early to sort of get into that at this stage. It's a very interesting platform. We sort of welcome the fact that it's coming. And I think it's still something that we are evaluating as to how to sort of utilize that platform for the benefit of our consumers. So that is work in progress.
Much for joining in, Amit, and giving us a view on your quarterly performance as well as the outlook ahead.